Well, let's talk about the problem a little bit that led us to where you are now. This buds for you apparently no longer applies for a lot of Americans. When we see Dylan Mulvaney and the commercial that was put out, a lot of people say, whoa, wait a minute, this is a great American beer company, and it's not what I want to be drinking from now on. But that's really just the headline, like you said. The real problem beneath that is, why in the world would a company decide to offend more than half their customers?
Yeah, because some of their largest, shareholders, and I'm going to use air quotes, push companies to take such actions. And so basically, if you look at the history of this, right, BlackRock in 2018, their CEO, Larry Fink, put out a now infamous letter to business leaders. So think about this. Every year, one CEO writes a letter to all of the other CEOs in America, basically dictating what he wants them to do and wants to see. And in that letter that year, he changed the paradigm for passive asset managers. He said they were going to get much more aggressive in voting their corporate proxy ballots. And let's talk about what happens. The technicals are important here, so let's lay the groundwork. At every publicly traded company, there's an annual shareholder meeting, and there are three sets of votes that take place. One is for the board of directors. The second is proposals that management puts on the ballot. And the third are shareholder proposals. And these shareholder proposals, Kevin, for the longest time had very little impact. They were more of like a squeaky wheel you could think of. But in 2018, when Fink changed that dynamic for passive asset managers, and they are the largest passive asset manager in the world, that really changed the efficacy of the shareholder proposals. They went from low single-digit support in 2017, and in 2018, with Fink's change, they jumped on average. ESG proposals got 24% of the vote. So a 10x increase in 1 year. That's a major effect and a major change, and these proposals affect culture.
Yeah, there's no question. I mean, give or take, BlackRock has something like $10 trillion of assets under management. I mean, it's a little higher, a little lower, but it's been in that ballpark now for a number of years. That is a big stick to swing.
Yeah, and if you combine it with the assets that State Street and Vanguard and on some of these issues, the three of them vote in lockstep, we're talking about $20 trillion in assets under management. That's on par with the GDP of the United States of America. And so when you think about that, 250 years ago, we threw off the shackles of England, right? We had a monarchy that we threw the shackles off. We sort of have a tripart monarchy now when it comes to the landscape of corporate America, when three CEOs can get in a room and switch a vote to change out the board members of a company, to change their entire culture by deciding to vote for things like net zero 2050 targets, even at American energy companies, that cause them to change the entire product makeup of their suites, right? So it can have a real dramatic effect. And so that's why, again, we decided to start Strive to compete with those asset managers, because we tell the underlying companies in our portfolio a very simple message. Focus on your shareholders. Why? Because that has created the most human flourishing in American history, or in world history, I should say. And by the way, you still have a legal duty to do